Could Bitcoin drop into 20K? What's really interesting about that question is that we have a CME gap right here between 19,500 to 21K. So in today's episode, we're going to be talking about how likely it is for Bitcoin to reach 20K and fill the CME gap by looking at the history of previous CME gaps and how have those been filled in the past. So let's dive right into this video. Subscribe to the channel for more videos like this in the future, and of course like the content for more videos like this going forward, and let's dive right in. So we have a CME gap right over here between 19,500 and 21K. That's the only real CME gap that we have in terms of downside movement from current price levels. This is a clear CME gap, but let's talk about some of the CME gaps that have been filled in the past. For instance, this one at around 33K or so, we saw in an uptrend Bitcoin's price break out, and then we saw a downside wick into there and a higher low. So this CME gap did indeed fill. We also saw one right over here, which was filled as well for a rebound. But one of the more recent CME gaps that we've seen get filled as well is that when Bitcoin broke down below from this support back in mid-June, we then recovered right over here. It got filled very well in terms of the upside, but also got filled quite nicely with an upside wick to the downside. So this was essentially a lost support, the CME gap, reclaimed as a support very briefly, flipped into resistance, as you can see here with the upside wick, break out, and then failed support and confirm of a new resistance. So this CME gap has been filled multiple times already, and it's been flipped into a new resistance. So when we take a look at this double top, because effectively this is an M-shaped formation right over here. M for murder is the mantra. Not a pleasant one for double tops, but a useful one nonetheless. Now we're at that 26K support. And notice how we spoke about the double top forming here in terms of developing its second half back in August 7th. Early August, we were talking about the symmetrical nature of this double top, and since then we've seen that second half get completed, and next week we're going to see mid-September, we're going to see that full symmetrical nature develop here. 90 days and 90 days, and double tops tend to be symmetrical patterns, so losing 20K here is going to validate that breakdown, and at the moment, so far so good. So in terms of this double top playing out, that is going to open up this CME gap to filling, and we essentially come up with a range in that respect when it comes to CME analysis. This CME gap acting as a resistance, and really if you wanted to extend this range, because notice how this CME gap here acted as a support here, resistance, and then even resistance here on this most recent local top. This is also a CME gap resistance. So you could argue that this is the range that we should be focusing on. But in terms of the double top right over here being confirmed or being close to confirming, this is going to be the range low for the CME gap, and this is going to be the range high for the CME gap. And let's talk about historical CME gaps being filled here. This one being the most notable one. We saw a CME gap get filled right over here, for instance. This CME gap being lost into the COVID crash and then acting as a support, which was a reaccumulation range before enabling the uptrend. And even here we had a small CME gap as well, which was wicked into before we saw further upside. So these CME gaps do tend to fill and be reclaimed as a support, as we saw here. Another CME gap, for instance, is over here, for instance, where we break out two local highs and then fill it as a resistance right over here, for instance. But one of the major CME gaps that you can see on the monthly time frame, and probably the only CME gap really, is this one right over here. This CME gap was filled in the short term as a support retest here as well, and then as a flip into a resistance. And you can see how this also marked out the local top for Bitcoin by Bitcoin filling this CME gap to the upside. So that's the only monthly CME gap that we saw get filled, and really interesting to see how we've just seen a rejection and essentially marking out that local top in the only CME gap that we see visible on the monthly time frame. So we are seeing the bearish fractal slowly take place, this lower high developing here. So in terms of the 20k CME gap that we see around this region approximately, this is where the bearish fractal is suggesting we'll drop into. And this is a bearish fractal that I shared in a YouTube video and of course in a tweet as well, late August. We've seen this bearish fractal really take place in terms of this third lower high here with this latest upside wick. And of course, this bearish fractal really does depend on that double top losing and validating. So the 26k support is really important, and losing this 26k support could enable a relief rally right over here before further downside. And that downside would probably see us get closer to that CME gap at the 19, 20, 21k region. That's what the bearish fractal assumes. And if you'd like to learn more about this bearish fractal, I've spoken about this in a video before, so check it out in the top right hand corner. But also one of the things to mention in terms of 20k getting revisited is the head and shoulders that I mentioned yesterday, that we might be seeing a head and shoulders play out. We have the structural elements, the left shoulder, the potential head, which is itself the double top, which is quite interesting. So this head is actually a micro double top. This macro head of the head and shoulders could be the micro double top, and a potential right shoulder, which isn't yet confirmed. And I'll talk about this right shoulder in just a moment, but the structural elements are there, most of them at least, and the volume underpinning this head and shoulders is also there. So in terms of a measured move for this head and shoulders, which isn't confirmed and we don't have a right shoulder, this is essentially a measured move of down to 15,500. And I spoke about this in yesterday's video, why I don't think that's necessarily the case. And one of those reasons could be that the neckline doesn't have to form in a horizontal manner like this, that we get a perfectly symmetrical head and shoulders with the right shoulder developing just as the left shoulder. We could see the neckline form a higher low relative to this left shoulder and develop a right shoulder somewhere here. Maybe this neckline could form a diagonal instead of a horizontal. And in this case, the measured move for this head and shoulders is very different. Once we break out from the right shoulder, for instance, it brings us actually closer to 19k. So once again, the lower band of that CME gap that we spoke about at the beginning of the video, if this head and shoulders produces a neckline that's more diagonal, where the right shoulder forms more at a higher price level than the lower left shoulder developed, then a measured move from that neckline breakdown would see price drop into the CME gap at around 19 to 21k. So it's really important to note that it's not a given how this head and shoulders will develop, whether it's going to be the horizontal one. There's scope for a diagonal one. So really interesting to note that measured move will really depend on how this head and shoulders develops. And that CME gap could get filled in the end, should the neckline form at a diagonal. But moving on to the monthly close, and I spoke about this September 1st. We haven't seen much of a update since then. There is scope for a relief rally to turn 27k, roughly speaking, into a new resistance before dropping into 23k. And the thing about 23k is that we've seen a lot of volatility around this region. So if we were to get a volatile retest of 23,300 once again, just notice the price points that we get back into, 19 to 21k roughly speaking. So it's once again that CME gap, that if we were to really see a volatile retest like we've seen back here And mind you, we've seen loads of downside wicks in each monthly candle pretty much. Downside wicks in this monthly candle, this one as well, this one as well. Not necessarily this one, but this breakdown candle also saw a downside wick. So for most of 2023, we've seen, out of the few months that we've seen this month, or at least this year, we've seen loads of downside wicks. So if we were to see a relief rally followed by a retrace in 23,300, a downside wick into that CME gap region wouldn't be out of the ordinary. And essentially speaking, we've recently broken down from this range into this range. So Bitcoin macro-wise is ranging as it has been here, but this time probably within a slightly wider range, and this time between 23 to 27, with scope for upside wicks beyond 27k, with downside wicks beyond 23k into that CME gap perhaps. And Bitcoin dominance itself, just to wrap up, is setting itself up for a retest of an old resistance area. So you see how this was a support, this was a resistance, this was then a support, which enabled a move into 58%. We're back at this resistance and we're trying to turn it into a support. And these are the two pathways I outlined a few weeks ago, several weeks ago now, in fact. We're holding this area as a support, and continued holding here is going to enable a bounce and a reversal in Bitcoin dominance. And why would Bitcoin get more dominant in this current market? And one of the reasons for that would be Bitcoin losing a bit more valuation, because people would be selling their altcoins, panic selling their altcoins, perhaps selling into Bitcoin if they're using alt BTC pairs, people escaping into Bitcoin. That's one scenario for this Bitcoin dominance growing and increasing, reversing from this region. So that's one of the things to note, that Bitcoin dominance is setting itself up for a reversal most likely, and it's still very much in a strong macro uptrend. So Bitcoin dominance could go to 58% over time. And so far this retest is and has been successful over the past few months. So continued price stability here could see Bitcoin dominance reverse towards the upside, but by the same token, we could see a downtrending Bitcoin enable this increase in Bitcoin dominance. So this CME gap isn't out of the question when we look at this monthly candle and potential downside volatility as a result of a potential drop into lower 20k. So this was an action-packed video, and one of the things that we haven't really covered is the macro range, and you can learn more about that in the video in the top right hand corner, and I'll speak to you in that one. Speak to you soon.